What up, 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 yeah. Yeah, remember, we're pushing a series called I Am Not a Trader with the E. Like trader. T-R-E. No, Trader. E for the MC. Do you know what I mean? So yeah, first episode, I was explaining everything. Let me just rephrase back. I was explaining everything based on the candlestick, like the candlestick itself. What is the candlestick? So I explained what the candlestick size are, what is the candlesticks, which candlestick is bullish, which candlestick is bearish, how do I identify a bullish candlestick, how do I identify the bearish candlestick. I won't drop a lesson on it, like a quiz on it. I'll just put a quiz, I think, on the. I'll just put one question, just one question here, and then yeah, I'll just wait for your responses to see if you guys really understood what I was talking about. You know what I mean? Wait, then I forgot to close. Let me close the door. Yeah, so we're back again with another one. Let's put the headphones on so you guys can hear me properly. So I explained everything. I'll leave one question here, and then the video will just pause where I left the question, and then you guys answer the question and then resume. Easy as that. See if you can get it right. So now, like, obviously now you understand what a candlestick is. By the way, shout out to kohanfx.com. This is the book I'm reading from. So I'll try and check the link to the ebook directly to their website so you can download it from the website, not from me, because it will be illegal to just share a book that's not even mine. Do you know what I mean? So yeah. Now we get into candlestick patterns. So I'll just read the overview like real quick. Obviously, I've always put the page on the screen so you guys can read with me. So yeah, candlestick patterns are one of the most powerful trading concepts. They are simple, easy to identify, and very profitable setups. Our research has confirmed that candlestick patterns has high predictive value and can produce positive results, right? So yeah, that says everything on its own. It's just like an overview about candlestick patterns. I personally trade candlestick patterns, is the author saying it. I personally trade candlestick patterns for more than 20 years. I can't really switch to another method because I tried thousands of strategies and trading method with no results. So he's clearly telling you that the best way to trade is by using candlesticks, because he also tried a lot. And for him to even compile a book for us to see, he tried everything. But candlesticks are the ones that are working. You know what I mean? So I'm going to introduce you to a holy grail. This trading system works, but be prepared to lose some trades. Losing is part of this game. You should know. If you're looking for 100% winning system, I highly recommend you stop trading and look for another business. Go gamble. But know that that's like 0 out of 100 percentage of win. Or you win day one, tomorrow you lose. Yeah, you win today, tomorrow you lose. The following day you win what you've lost, and then it's just a cycle of you giving them their money and getting back your money, like just like that. But yeah, so he said, the author himself said that if you're looking for 100% winning system, I highly recommend you stop trading and look for another business. So yeah, know that trading is not a 100% winning system. Sometimes you win, sometimes you lose. It's not gambling, but sometimes you win, sometimes you lose. It will get into risk management. You'll understand what I mean, man. But it will be a long series. So this, remember, is for beginners and people who really want to understand what a candlestick is and how do candlesticks work when it comes to trading. So yeah, 100% winning. I recommend to stop trading, look for another business. Candlestick patterns are the language of the market. Imagine if you're living in a foreign country. Keep imagining. Put the imagination in right now. Close your eyes. So imagine if you're living in a foreign country. You don't know. Imagine if you're living in a foreign country, yeah, and you don't speak the language. How could you live if you cannot even say a word? It's tough, right? The same thing when it comes to trading. If you know how to read candlestick patterns the right way, you'll be able to understand what these patterns tell you and about the market dynamics and traders' behavior. This skill will help you better enter and exit the market at the right time. In other words, this will help you act differently in the market and make money following smart guys' footprints. So he's a smart guy. He knows better. So you will be following his footprints. Easy as that. So yeah, the candlestick patterns that I'm going to show you here are the most important patterns that you will find in the market in this chapter. I'm not going to show you how to trade them because this will be explained in detail in the next chapters. You know what I mean? So what I want you to do is to focus on the anatomy of the pattern and the psychology behind the formation, because this will help you get the skill of identifying easily any pattern you find in the market and understand what it tells you to do next. If you can get the skill, you will be ready to understand and master trading strategies and tactics that I'm going to teach you in the next chapters. So it's him saying, but it's me saying too. So if you understand all the concepts about the patterns and stuff, you'll understand strategies and tactics, because everything's like a chain reaction. It's like uh, digging a foundation, gathering bricks and applying everything. Like gathering bricks and everything, and then building the wall, and then putting in the roof. You cannot start with the roof, then the foundation, and then build the house. Like, it's impossible. You need to follow everything step by step by step. So if you're impatient and you don't want to hit the subscribe button, then get out of here, man. Get out of here. So just be patient with me. Follow the series. Just take it one step at a time. We're going one step at a time. I'm gonna show you everything one step at a time, based off the book, which I'm put like the pages already in front of you. You can see what I'm talking about. I'm not even saying things from my head. You know what I mean? Remember, I'm not a trader. I'm not pro. I'm just learning like you, and we're both learning. So I realized that the best way for me to learn is to explain something to myself through a video, like actually teach myself through a video, and that's how I learn. So I realized that if that's my way of learning, and that this can also be a way of someone to learn. Like, this can also be a way that someone learns, you know what I mean? So this is the way I'm gonna teach you guys and how we're gonna roll. Hit the subscribe button. Yeah, I'm waiting. Hit it. Right. Let's get down to business. Yeah. So I will start with the first candlestick pattern is the engulfing bar candlestick pattern. So the engulfing bar, as it states in its title, is formed when it fully engulfs the previous candle. The engulfing bar can engulf more than one previous candle, but to be considered an engulfing bar, at least candle must be fully consumed. So let's look at the bearish engulfing. The bearish engulfing is one of the most important candlestick patterns. This candlestick pattern consists of two bodies. The first body is a smaller body, and the second one is, in other words, the first body is smaller than the second one. In other words, the second body engulfs the previous body. Yeah, you see the picture on the screen. So this is how an engulfing pattern looks like. So you'll have a smaller body and a bigger one, and then so therefore a smaller one is engulfed by the bigger one. Bearish, meaning that the price opened where? Price opened at the top, closed where? Below. Meaning the candlestick is bearish. So for the bearish engulfing bar, you'll see a small body and a long candlestick where price opened at the top and closed below. See, it's a chain. I told you. Now, if you don't understand what I'm saying about price opening at the top, closing below, it's because you didn't look at the previous video. Check the previous video and then understand what I'm saying. You know what I mean? So yeah. Now, in case of the bearish engulfing bar, this pattern tells us that the sellers are in control of the market. When this pattern occurs at an end of an uptrend, so if the market is ranging up and that pattern occurs, so you see a smaller body and a bearish one engulfing, this indicates that the buyers are engulfed by sellers, which signals a trend reversal. So meaning that the market can reverse at that point in time, because the buyers were taking it up, and then you see a small body of a buy, of a bullish small body, and then a long bearish small body. Then you know that it appears we're at the top of the uptrend, meaning the market is going down. The market is going down because the bigger candle has engulfed the smaller candle. You dig? D-I-G, not the other word. So yeah, everything's on the screen. You'll see what I'm talking about. Yeah, as you can see, when the price action occurs at an uptrend, we can anticipate a trend reversal because buyers are not still in control of the market and sellers are trying to push market to go down. You can't trade any bearish candlestick pattern you find on the chart. You need other technical tools to confirm your entries. So for the fact that you've seen a bearish engulfing doesn't mean you must trade it. You need other what? Confirmation technical. You need other technical tools to confirm your entry. We'll talk about them in the next chapter. Right now, let's focus on identifying the candlestick patterns. So yeah, opposite with the bullish engulfing bar. So bullish engulfing bar consists of two candlesticks. The first one is a small body and the second one is an engulfing candle. As stated, same applies to say like the statement you saw in the bearish is statement that applies in the bullish. But here, the bullish engulfing bar pattern tells us that the market is no longer under control of the sellers. The buyers will take control of the market. When the bullish engulfing candle forms in the context of an uptrend, it indicates continuation. So if it forms in an uptrend where the market is bullish, it indicates what? Continuation. But when the bullish engulfing candle forms at the end of a downtrend where the sellers have been there, it indicates what? A reversal. It's a reversal. It's much more powerful as it represents a capitulation bottom. I don't know what that is, but you can use a dictionary. The word is there. So yeah, you can see your chart here. So it comes from the top, it goes down, and then you see a bullish engulfing bar, and then the market changes direction here and continue to go up. Are we clear? So this example shows us how clearly the market changes direction after formation of a bullish bar pattern. The smaller body that represents the selling power was covered by the second body that represents the buying power. The color of the bodies is not important, like I told you. What's important is the smaller one. If the smaller one is fully engulfed by the second one. Don't try to trade market using price action setup alone, because you'll need other factors of confluence to decide whether the pattern is worth trading or not. I'll talk about this in the next chapters. This is a cool series because he tells you about what's going to happen in the next chapter. So, KohanFX.com, shout out to him, shout out to them, shout out to the group. Yeah, so now in the next chapters, you're going to learn about confluence and stuff. You cannot just trade price action setup alone. What I want you to do now is get the skill of identifying bearish and bullish engulfing bar on your charts. This is the most important step at the moment, right? So we'll do this at the end of the chapter. Like I'll put a chart so we identify the bullish and the bearish engulfing bars. You see me? You get me? Yeah. Next up, we have Doji. The Doji, like Doji, it says the Doji, Doji, D-O-G-I, DJ, you know what I mean? So the Doji candlestick pattern, Doji is one of the most important Japanese candlestick patterns. When the candlestick forms, it tells us that the market opens and closes at the same price, which means that there's inequality and indecision between the buyers and sellers. There is no one in control of the market at this time. So if you see a doji, it's like a small line, it's like a T, it's like a cross. Price opened and closed at the same spot. So meaning, meaning the buyers and sellers have the indecision right there. Like nobody's in control. They're both trying to like, the buyers are saying I'm going to take it. The sellers are saying I'm going to take it. So it's just indecision. So as you can see, the opening price is the same as the closing price. This signal means that the market didn't decide which direction it will take. When this pattern occurs in an uptrend or a downtrend, it indicates that the market is likely to reverse. So if a doji occurs below at a downtrend, you know it's likely to reverse to an uptrend. But if a doji appears at the top, it's likely to reverse downwards. Easy as that. So you can see an example here. The chart above shows how the market changed direction after the formation of a doji candlestick. The market was trending up. That means that the buyers were in control of the market. The formation of the doji candlestick indicates that the buyers are unable to keep the price higher, meaning the sellers push the price back to its opening price, meaning the buyers have already pushed it up, but they can't keep it that up. So the sellers came in and pushed it to an indecision, meaning they want to take it where? Down. Easy. This is the clear indication that the trend reversal is likely to happen. Remember always that a doji indicates equality and indecision in the market. You will often find it during periods of resting after big moves or higher or lower. After what? Remember that remember always that a doji indicates inequality and indecision in the market. You will often find it during periods of resting after big moves higher or lower. When it is found in the bottom of the it's found in the bottom or the top, it is considered a sign of a prior trend losing its strength. So if you find a doji at the bottom of a trend, you know it's likely to reverse. The market's likely to reverse. If you see it at the top, the market's likely to reverse down. So yeah, if you are already riding the trend, it's time to take profits. It can also be used as an entry signal if it's combined with other technical analysis. So if you're riding a trend up, like a bullish trend, you see a doji, you know it's time to take your money out because it's a high signal of a reversal. So yeah, wait a minute.